connection lost. That doesn't matter. Right, so I managed to sort this out so I can quickly show you what I meant by levels. I think it's definitely going to help being able to actually look at what I'm talking about. So, why does it keep connecting or not connecting? It's annoying. Right, so levels. Looking at this chart here, right, so let's just give you the basics. This is oil. 1 bar, yeah, constitutes 4 hours, because we're on a 4-hourly time chart, right? So 1 bar equals 4 hours. Okay, on my chart, this is how I've got them set up. They're opposite to how you'll probably see them. Sometimes they're blue or green. The white ones are obviously going down, and the black ones are going up. That's just how I've got used to it. You can change those to however you want it to look. The wick here, this part here basically means that price during the 4 hours of this bar, price went all the way up here. People bought all the way up to this level, and then sellers started to come in and they took the price back down, and this was where it closed. So there's 4 price points on a 4-hourly bar. We'll just quickly look at here. Right, so you have got on this one here, see if you have a look at these numbers up here, this one here, the O is for open, high, low and close, right? So on this bar, the open was 17.253, which was here, there somewhere. The high was 17.321, which is just at the top of that wick, as you can see. The low was where it closed pretty much as well. Yes, it closed on the low. Right, so you can understand within that price, that hour of why does that keep happening? Within that hour, price traded down. Pretty much it went up a little bit, but the sellers were in control and price moved down and closed there as well. That was followed by another candle. This candle, I don't know why that keeps happening, but I will sort it out for the next one. Within this candle, price opens here, trades up a little bit. It might have opened, messed around down here, and then traded up and then come down. You'll only know that by dropping down into the lower time frames. But as you can see here, price traded all the way down to here, right? All the way down to this level here. Don't know why that's happening like that. And then buyers have stepped in and brought price all the way back up to this level here, right? And that's where it's closed. Now, as you can see, price has gone up here, traveled down here, come back up, and it's sitting here now, right? So that's pretty much what your candlestick, just remove that shit. That's what your candlestick means. You'll understand that one candle is one piece of time, depending on here. So one candle on the daily chart equals 1 day, 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 right? So you understand that. So we'll drop back to the 4-hourly. So you want to train your eyes, and this is how I learned. Everyone learns differently. To look for price points where price has reacted in order to get a level. So my eyes immediately, right, if you follow the horizontal line here, my eyes immediately drop to this level here, roughly this level here, right? Why is that? Because we've got price strongly moved down, rejected here, come back, just touched it there, dropped through, has come up and respected it here 3 times, messed around down here, come shy but pushed through, ultimately at this level found rejection again. You can see pretty clearly there, it comes back down, trades up and rejects it again there. So you know that price is delicate around this area. People are interested in that number, $28 a barrel, right? We're down here at 14. So if we started to see bullish signs, I'd be looking for price to be around this level, or I'd set an alert to let me know when price, you know, it might do this and then it gets to here. But here, I'm going to expect some sort of reaction, right? Either it to carry on going back down, or to stabilize, come up, and maybe come back up to here. This, I would say, here is the next recent level, because you've got that reaction here, and it's just clearly broke back through. So you understand what I mean by levels, right? We'll try and find some more. And what you want to do is you want to go onto your charts. This is TradingView, which I use. You can use it for free. There's a couple of adverts, etc. But when you start to trade full time, you might want to buy the subscription. I've got a referral link for it. I don't even know what I get. I think I get like a tenner or something. But it'll just maybe help me towards my next subscription amount. And you ain't going to pay any more for that. So if you could do that, I'd appreciate it. Okay, so let's look for some levels here. You can see this price here. You see how I was explaining before, right? How where you've got sellers stepped in, buyers stepped in, right? So sellers stepped in here, buyers stepped in. Come back down to the buyers stepped in. Come back down here, buyers stepped in. But it come back down here for the fourth time, right? What does that mean? Yeah. Someone's going to give up, right? Either the buyers are going to get stronger and stronger, and the same for here, right? Sellers come in, sellers come in, sellers come in. It's all about who's win, who wants the price to go in their direction more, and have got the money to do so, essentially as well. Where's the market bias? Anyway, price comes back down to this level. Delete that, and we'll just chuck one of those in. And you can see here, the price respects it in here as well. Here as well. Doesn't really, but it does. Here, look, bang on here, taps it loads here, fucks around with it here, but it respects it here, rejects it there. So you can see how this price has, it's a key significant level, and this is on a daily chart as well. Obviously, the higher the chart, the more significant the number. If you're on a minute or 2 minute chart, the level's not going to have that much significance because it's not, it's not spent enough time there. The price has not been offered. Think of it like an orange market, right? You're at a market, there's loads of people selling the same orange, right? And no one really knows what the orange is worth. So they start offering the prices, okay? The only way you can really tell is what the market's willing to pay for the orange. So let's start at like a £5 an orange. Anyone want it for a £5? Nobody wants it for a £5, right? Okay, so you're selling it up here for a £5. No one really wants to buy it here. A couple of people bought some oranges at £4. No one really cared though, because it's just ridiculous for an orange. It gets down to £2. There were some buyers at £2 for an orange because they fancied oranges. They thought, probably weren't going to dip any further. Come back down. If you'd have had the historical level, and you'd have known that oranges are usually, that's at $50 a barrel, and that's quite a big psychological level, a number. But say for instance that was like 50p for an orange, and that's generally the price. There's a lot of buyers around 50p, right? So price is respecting that level. It dips down below. So now it's below 50p. Well, you notice, look how quickly people just buy it up. Oranges at 15p, loads of people bought them at 15, 25, 30, 35, 40, 50p, back up to 50p again, and there's buyers, and buyers are in control of the market now at 50p, 60p, back down, people buy at 55, 70p, back down to 60, right, it's up to 75, 80p, people are still buying here, right, £1, £1.50, £2, £2.50, people are buying back into this level, right, level here, level here, right? So we're just coming off these price points each time. So that gives you an understanding of what's actually happening at the levels and what why you're expecting some sort of reaction. All right, because you're trying to find the right price. You can't be brave in this, yeah. Don't expect to buy it and all of a sudden the market to go up after that, because who cares about you? Unless you've got like $1 trillion account, you ain't going to move the market. So you need to move with the market, or after the market's already made its maneuver, right? The market made its maneuver here, right? It really rejected that and it come back up above the 50p level, or $50 a barrel level if we're talking about oil. Come back up above $50 a barrel. It was too cheap down here. They ate it up. So you know that $50 a barrel is a good price to buy. Where's your first target going to be? Well, the next level, really. Not much happened in here. Was there? Nothing really happened. It was around this price people were interested. So that's where you're going to start being interested again, to see if price can break through or come back down. And that's why levels are important. It can be seen on any time frame, any chart, anywhere. Obviously, the lower the time frame, the more, they call it noise, but the more sort of like flickering around and messing about with price. So you'll find it a little bit more difficult to find the levels. That's the one that we found earlier on, wasn't it? But if you zoomed in on like an intraday basis, so each one of these segments is 1 day. Sort of, let's have a look here. You can see there's a level there straight away. There's a nice strong candle there. Price has come down below and then pushed up, rejected and closed up, right? But don't forget, you're in a downtrend market, so you're looking for bearish candles, really nice big bearish engulfing there. So let's look at the level. I'll say your level is going to be there, isn't it? Right? Tested it, pushed through, pulled back, closed back below, tested it, rejected, tested it, rejected, tested it, rejected. Loads of opportunity to sell there. And as you can see, obviously it just kept pushing down. But there's another little level that you could have spotted on an intraday trade. All right, price has rejected really strongly, pushed through, it's come back, it's closed below, it's made its way back up, it's touched the level, and then it showed a really strong hammer candle. So price come up here, it opened here at $17 a barrel. People started buying it at $17.16. It got all the way back up to that level that you was expecting a reaction at $18.18. Price has then fallen back down and closed below where they started buying at $17.41. All right, it opened at $17.59. That is a good enough chance to buy, to sell. All right, on an intraday basis, that'd have been a nice little trade for you. Depending on your strategy, all right, you could have entered on the close of that candle, stopped right at the top because you know that price, when it got there, sellers stepped in and didn't allow it to go any higher. So if price was to break higher than that, then you're probably wrong, or it's chopping around a little bit. But your intention is the market's going down, price has rejected an important level that it previously broken through within a downtrend. You know, if you'd have got out right at the bottom and you're risking 2% per hour, you've just made 10% trade. They're hourly candles, so that's 1, 2, 3, 4, 5, 6, 7, 8 hours. You're out of the market at 10 o'clock in the morning. You got in at 2 o'clock in the morning within the Asian session. It's a nice trade. But that's just a little quick snippet on how to use levels. It's very basic, it's very easy, and you're only going to have that sort of that instinctual eye, like, you know, what I've sort of used here to show you guys. You can pick it up on any sort of time frame, and it just takes time. I can look at the chart now and see, bang, that's a level, bang, that's a level, bang, that's a level in here. You're only going to be able to do that efficiently and well, and know that you're doing it well once you've done it a lot. And let's face it, people get it wrong all the time as well. As professional traders, you know, you don't know if that level is going to hold. You don't know, and that's the whole point. That's the whole part that makes trading difficult. You don't know if that level is going to hold. You know, if you're here, you don't even know if it's going to come back up here, right? You don't know it's going to come back up here. You're assuming it's going to keep going down. But that's why we draw levels out, because we say, right, okay, well, if price does get back up to here, right, that's when we're going to be looking, if it does get up there, right? There's no point trading down here, selling here, because you don't know where it's going to go. And you've already seen all this market move down. But then gradually, as the market comes around, you've got your alert set, bomb. Your alert might have gone off here. Right, okay, we're here, now I'm interested. Let's see. Because the market's in a downtrend, I'm expecting it to reject it as it has done before. If it could have broke up like this, completely invalidating this level, right? The sellers weren't there again, nowhere to be seen. It come back down, tested the level, buyers come back in and pushed, then you can see that's some sort of reversal coming on. But this stuff is very easy, right? Very easy to see in hindsight, and to look at this chart and go over and do it. And that's why you need to spend hours sitting there back testing, right, and going through this shit yourself, and then forward testing it in a demo account, because you just don't know. You don't know if the price is going to be coming up here, and it might not. So that's something that you'll figure out. You know, it could have come down here, it's broken in market structure, it's come back up. So it's going to take you a long time to get used to it, but start with the levels, start with understanding a few different markets, start by drawing your levels, and then again it's with patience, right? Because you could have thought, oh, the market's never going to come back up here again, I'm going to go short here and target down here. Well, look what happened, price comes straight back up. And that's when patience comes into things. This might not happen all week, right? You might be sitting there bored titless, and then all of a sudden, within a couple of hours, boom, your price is there, you've got a trade entry, you know, the next day after your price has hit the validation level, then your trade is active, all right? So it's 2 or 3 or 4 days of planning. You know, planning takes a couple of hours or 20 minutes. Patience takes days. The actual triggering of the trade takes minutes, seconds, and then you've maybe got a day's worth of wait, or a few hours or a few weeks sometimes, depending on what sort of trade you're looking for. And what sort of trader you are as well. So that's my information on levels. If you guys want some more information on levels or how I trade them, I can do another video. We can go into more detail, but that's pretty much my explanation for you. All right, enjoy.